Welcome everyone. In this video, we will look at when Xlm coin is bullish. Don't forget to subscribe and like the video, and please watch to the end to understand. The price action built on top of the current uptrend really provides a strong indication of the general mood in the market. As prices move through certain levels in this uptrend, each pullback can actually be considered a healthy correction within the framework of the market's own dynamics. Such movements are often considered as an attempt to create an equilibrium as the market tries to strike a balance between buyers and sellers at a certain level. This can be seen as a preparatory period before a stronger trend. If prices return to these levels again, the levels near the falling trend line will play a critical role. Since these levels have been tested before, prices may have reacted and moved on in the past. In a way, this means that there is an advantage to observing how the price has reacted here before, as opposed to untested levels in technical analysis. With this in mind, traders can build a more robust strategy by drawing inferences from past price action. If this falling trend line is to be approached again, it will be important whether buyers will step in here. If the price receives a strong buying reaction when it approaches this level, this increases the potential for the market to continue moving strongly upwards. However, such pullbacks can actually be an opportunity for traders, because if a reaction at a certain level starts an upward movement, the price may continue to rise at a faster pace. However, another important thing to note at this point is that investors should analyze the general market psychology correctly. If many traders have opened positions before the price reaches this level and are ready to take advantage of the declines, this may cause prices to go back up. In such cases, it is quite possible for bearish levels to turn into a potential buying opportunity. This is because investors may be tempted to buy when prices are falling, which could cause the uptrend to accelerate. Another important issue is what position traders take during the reaction to this falling trend line. If buyers take control at this level, the price may start to move up more strongly. Also, if prices encounter significant resistance at this level, they may continue to move rapidly upwards. Such movements signal a buildup of momentum in the market and can often set the stage for a stronger price move. The stabilization of prices at a certain point within an uptrend is also something to watch out for in terms of long-term investments. By observing how the market behaves at this level, investors can make a more informed decision. A rise at this level could signal the start of a new trend and cause prices to accelerate towards higher levels. Correctly interpreting such movements allows traders to take the right position in the market at the right time. If you are waiting to buy, you can wait for this level. Elliott wave theory is an extremely powerful tool for understanding price movements in financial markets and predicting future trends. According to this theory, markets move in a certain pattern, and these movements are organized in 5 waves. In the wave structure we are currently watching, the first wave is complete and the second wave is underway. The second wave is usually a corrective wave, a period when most of the market movements recover, stabilize, and investors prepare for new opportunities. Second waves tend to be sideways because markets often go through a stabilization process during this period. During the first wave, buyers enter the market strongly and push prices higher. But in the second wave, investors may sell to take profits or move cautiously due to market uncertainty. This corrective move helps the market stabilize and potentially set the stage for a new period of growth. However, this sideways process actually holds great opportunities for investors. This is because the next phase is the third wave, and this is usually when the price action is the strongest. When the third wave begins, you can see an intense bullish movement in the market. This wave follows the combination of the previous 2 waves with strong momentum and presents a profitable opportunity for traders. Therefore, when the second wave is completed and the third wave begins, it is important for traders to position carefully. According to Elliott wave theory, the third wave is generally considered the longest and strongest. Traders can take positions expecting prices to increase during this period. This is because when the third wave begins, the market usually comes under strong buying pressure, which leads to a rapid rise in prices. As a result, important technical targets such as the 618 Fibonacci level can be reached. Fibonacci levels are often used to set price targets, especially by traders, and the 618 level is often a decisive point after a strong rise. For many traders, reaching this level marks the completion of a target and opens up opportunities to take new positions. When the third wave begins, buying pressure is expected to increase. This is because market players may realize that prices are rising and continue to buy. This can cause a strong upward movement to accelerate. The third wave is often seen by larger investors as a period when prices will gain momentum and create opportunities for profit taking. Therefore, The beginning of the third wave opens a window of opportunity for investors where big gains can be made. If we talk about the importance of Fibonacci levels, the 1618 level could be a critical point for investors. Breaching this level is an indication that the market can go much higher, and we should patiently wait for the end of the second wave. The ascending triangle pattern is a very important indicator for the development of a strong trend in the market. In particular, when the price approaches the upper line, it indicates that buyers are strongly involved and selling pressure is decreasing. This type of pattern usually develops with an increased intensity compared to previous price movements. That is, buyers send a signal that they are willing to push prices to higher levels. This type of pattern usually occurs during a period when the price is trading in a narrower range and the movement starts to intensify in a certain direction. When approaching the upper line of the ascending triangle, the price touching this level indicates that the uptrend is gaining momentum and the market has reached a breakout point. This is a time when traders should be very careful, because at this point, the price can either move significantly upwards or pull back due to the resistance encountered. If the price manages to cross the upper line, this could be an important confirmation sign for the bull market. A breakout of the ascending triangle signals the beginning of a new price movement, usually a longer-lasting uptrend. At this point, the width and length of the pattern can help determine the size of the potential price move. Crossing the upper line indicates that buyers are dominating and prices are likely to rise further. Such breakouts often create strong momentum, and we can also observe that large investors tend to buy. However, the strength of the price action after the breakout of the ascending triangle pattern also depends on the overall market situation. If the overall market is bullish and other technical indicators are also giving buy signals, then the breakout of the ascending triangle may be followed by a much stronger upward movement. On the other hand, if there is uncertainty or bearish sentiment in the market, the breakout may not be as strong as expected and the price may retrace quickly. The path of the price after the breakout of the ascending triangle will also be an important indicator for traders. If the price quickly makes new highs after the breakout and the move is supported by solid fundamentals, this would indicate a continuation of the uptrend. However, if the high volatility at the time of the breakout quickly pulls the price down and the market returns to the breakout point, this could be an indication of uncertainty and weakness in the market. In such cases, traders should be cautious and consider possible pullbacks, and we should wait for the price to break the upper line and retest above it. That's when it becomes bullish. This uptrend in the RSI indicator is actually a very important sign that shows the strength of the overall momentum in the market. The RSI approaching this trend line is not only a technical indicator, but it also determines what kind of direction traders will set about future price movements. This is because the RSI approaching an ascending trend line can signal that buying pressure is starting to build in the market. Traders watch such indicators carefully, because they often play an important role in determining the direction of trends. Whether there will be a breakout at this level, that is, at the point where the RSI touches the rising trend line, will directly affect the future movement of the price. If the RSI breaks through this line and starts an upward movement, this can be considered a buy signal for traders. This is because a sustained strengthening of the RSI at this level creates a very solid foundation for the price to climb higher. Also, the RSI crossing this line could herald a move toward the bull market, as a strong rise in the RSI indicates that buyers are dominating the market and a generally positive trading atmosphere is building. It also makes sense for the RSI to pause near the rising trend line and then rebound from there. This could create an opportunity for the price to head higher again. The RSI's approach towards this level also marks a moment when the resistance points in the market will be challenged. So, traders should be careful here and analyze a possible reaction correctly. If the RSI retreats from this level and starts to fall, then it is possible that the price will also go for a short-term correction. However, this pullback may only be a short-term correction, and an upward movement can be expected to continue in the long term. Also, the reaction of the RSI from this level may reflect the emotional state of the market players. If the RSI starts to move upwards from here, it shows that optimism among traders is growing and the bull market is gaining strength. The RSI's contact with its uptrend also reveals the struggle between support and resistance. If traders test this level and buy, the price is likely to rise significantly. If the RSI bounces off it, the price will bounce upwards. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.